Everyone loves a 5-minute chart because it looks exciting, but is it actually profitable? Ladies and gentlemen, fellow traders, friends, welcome to the live show on this wonderful Thursday, August the 6th, 2026. Hopefully you're all well. Hopefully you're all making loads and loads of money this week, and it's just falling out of the sky. Lamborghinis are parked in your yard, Ferraris are parked in your yard, Porsches are pulling up and being delivered to you, and there's just a bank full of money that's coming out of your bank account. Let's have a look at the trade, shall we? Let's have a look at the markets and see what we're doing. Blue Mango, how's it? Welcome, good to see you. Today I am gonna, in the live show, talk a little bit about 5-minute trading and why 99% of traders actually struggle there, why 99% of traders actually lose there. No matter what you do, that's the statistic and that's how it goes. Today I took a trade on the US dollar ZAR. The US dollar ZAR is once again in play. Look at this, it's come into the support. Looks like it wants to bounce up. And that's basically what you do. It's in the support, so you grab it and go for the long based on that scenario. Imaginary user, hi, hello, welcome. Good to see you again. Lovely to have you on board. I'd love everyone to tell me today whether they prefer exciting trading on the 5-minute charts, or whether they prefer swing trading, taking it easy and having a relaxing lifestyle. Most people, oddly enough, end up trading on 5-minute, 1-minute charts, getting all excited about it, and then eventually finding out that that's not really what's going to work for them, and they lose all their dosh. But we'll get into that. We'll talk about that. This is the gold. The gold moved up nicely. That's kind of my cost, actually. It needs to go up above that, and then it'll look a little bit better, but we'll see how that goes as well. I just want to make sure that these charts are all in their place. Yeah, there we go. That looks a little bit better, because I had this thing out of the way this morning because I was busy working there and looking at some stuff. And then, of course, we've got the S&P 500. What's going on? This is coffee, not the S&P 500. Why did it go to that? That's better. That's the S&P 500. That looks more like it. It's shooting up to the outside. It broke up beautifully. It broke up to the upside, shot up. It's hit a level at the top, and it's kind of settled here. Now, you might be wondering why. Well, earlier on in the week, on Tuesday's live show, I was actually saying to you that I was expecting that this will in all likelihood come back for a retest, and there will be some catalyst which will make that happen. And what's that catalyst? Well, if you noticed this morning in the members video, I did mention, and it has been all over the news, that some of the larger companies are actually laying people off. Now, if people are laying people off in the market, if people are losing their jobs, so to speak, don't you think that it's going to have some effect on the market somewhere down the line? Don't you think it's going to have some effect on the earnings somewhere down the line? I will talk about 5-minute charts shortly. We'll get into that, and we'll go through that whole purpose and story and what have you. 5-minute charts are an account blower, according to Blue Mango, and you are correct. You are so correct. It's one of the worst things that you can do. What actually happens with 5-minute charts? And let me start off with the 5-minute chart scenario. I've watched people, I'm on 5-minute charts, I can't figure out what they're doing, and every single one of them sells a course. Yeah, of course. Of course. Excuse the pun, of course. Yeah, no, they're all trying to promote to you that you can make money quickly, and it's easy to make money, and there's a fast way to make money, and everyone's got their own little system when it comes to that. The ghost candle, the opening candle, opening sessions, closing sessions, all these different things come to mind. And I gave it a try many years ago, and it really wasn't as simple as one thinks it is. What actually happens is traders get bored. Traders get bored. They've got no one to speak to. They've got nothing to do. And as I've said to you guys, you take a trade. Let's say we took a trade on this S&P 500 now. Said we want to go long. That candle's not going to move. It's not going to do anything. It's just going to sit there and go, I'm a candle, and do nothing. And you're going to be looking at it thinking, well, what now? And you're looking at this chart and it's not doing anything. It's not moving around. It's not flashing. And people need instant gratification. Now you've got nothing to do. You're bored. Maybe you don't have other forms of income, another job, or whatever the case. So you think, I know what I'll do. I'll drop a time frame. So you drop from the H4 to the H1, the 1 hour time frame, because that's the next best thing, because it's kind of moving a bit faster, and that gives you a little bit of information. But you take a trade, and guess what? The candle still sits there and says, I'm a candle. I'm not going anywhere. I'll just sit here and wait for what happens next. So you're still bored, and nothing's happened yet. So you think, I know, I can handle the 30-minute. I'll drop to the 30-minute. So you drop to the 30-minute and you get a bit of a wider picture. And you think, well, I'll trade that. But once again, you take the trade, and nothing happens. It just sits there and does nothing. So you very quickly end up on the 15-minute chart. And the 15-minute chart has actually got some movement on it. Look, the candle actually moves. It's breathing. It's got a heartbeat. There's something happening on the charts on the M15. And you think, wow, this is the one for me. So you start trading on the M15 and you get all excited about it. And you start taking a few trades and you start losing a few trades, because believe me, close to 99% of people lose on the 15-minute charts as well. Hey, for those of you who don't know me, I'm Rob and it's Coffee with Rob. Good old coffee. So anyway, you're on the 15-minute charts and you're working around the 15-minute charts, and it seems okay, but not great. It's still a little bit slow. You're still a little bit bored. Bit better than what it was, though. It's keeping you busy. And then you think, but I've seen all these guys on YouTube on the 5-minute charts making a fortune. Ferraris falling out the sky, cash just lying all over their desks. They must be making a killing, flying around on private jets and doing all these fancy things. And they're all trading on the 5-minute chart. So what am I doing on the 15-minute chart? Am I crazy? Am I a fool? No, let me go down to the 5-minute charts as well. So off you go down to the 5-minute charts. Now you're on the 5-minute charts and you're trying to trade them. Next thing you know, it's swallowing up your money like you've never seen in your life before, and you just can't understand why. You don't know what's going on. Well, let me tell you what's going on. On the 4-hour chart, the last candle is just about all of these candles that you see in front of you. Everything that's happening here is basically happening in one candle on the 4-hour chart. So when I take a trade on the 5-minute chart, what I'm doing is I'm going in here, I'm saying, oh, there's a level there. I'm going in here, I'm saying, oh, there's a level there. Excuse me if it's not 100%. And I'm saying, okay, I'm going to go short here. I take a trade down to the support. I'm going to go long here. I'm going to make money on this particular trade. And then it goes, but then how much are you actually making on this short? So you got 7738 down to 7728. 10 pips, 10 points, 10 whatevers. Okay, 10, right? That's your risk, and you're going to risk another 5 up top here. So a 5-point move is like that's your money gone. So if you're risking $500 per trade, you've got 5 points. It's $100 per point. Just think about the risk you're putting in here. 5 points. All right. So you want to know what 5 points is, right? Let me just delete this. Okay. 5 points. Let's go to the H4. All right. Is that tiny little candle on top there, that tiny little move on that little wick over there, that's 5 points. In other words, that tiny little move above the wick there, that's 5 points. That's a 5-point move. So that's what you're risking. So that's how heavy your risk is. But if you want to know the best way to trade a 5-minute chart, it's not that difficult. It's not insane, but it is silly to do it. Okay. But if you look at the market and you look at the S&P 500, for example, and you think, well, I'm going to trade on the 5-minute charts. Let me see what to do here. And I'm going to trade the S&P 500. Let's say you can do it with gold or whatever the case. What I do say is if you are going to trade on 5-minute charts, do yourself this one big favor. And that is pick three products and trade with those. Don't try and trade the whole market like we do. Understand one thing, you're going to lose all your money. You're not going to win. Only 1% of traders actually get over the losing part, and only half of those actually win anything. The other half maybe walk out with their underpants on. So the one thing I do not recommend is getting into 5-minute trading. So what you're going to do is you're going to look at the market overall and say, what is the S&P 500? Well, it's bullish. If I go to the day chart, it's still bullish. There's a bit of a bearish candle there, but in general, the market is bullish on the S&P 500. So what I used to do is say, well, in that case, I'm only going to take long trades. I'm not going to take any short trades on the S&P 500 because it's bullish. So I'm looking for long trades. So then when you take it down to the M5, what you're going to be looking for here is long trades. So what you're going to do is you're going to say, well, I've got a resistance across the top here. I've got a support down the bottom here. And I'm not going to get into detail on drawing the support and resistance right now. You guys know how to do that for the swing trading. But if you're trading 5-minute charts, really doesn't matter. Just draw the resistance, just draw the support. What I would do is then draw my trend line in and say, well, I'm only looking for long trades. So there's one of two things that have got to happen here on this 5-minute chart. One is it's got to come down to the support and give me a green candle up, giving me a long trade. Risk to reward very poor because it's a very small amount and a very big amount. What I really want is for it to come all the way down to the support at the bottom here and give me a buy out of the support at the bottom here with a view to it going up to the top here. That's how I would trade the S&P 500. No short trades. Can't take any short trades because the market is bullish. So let's say it's not just the S&P 500. Let's have a look at another trade. Let's have a look at something else, just so that you can get the picture just a little bit better. Hope I'm not boring you guys too much. And let's just see. I'll take it to the H4 there. Let's take it back. Let's go and have a look at, for example, gold. We've got gold on the go here. We can have a look at that as well. Before I do that, let's have a look at the questions. I've tried picking trades on the 4-hour daily and dropping to 15-minute for an entry. That works pretty well. Makes me feel like I'm doing something, but it's still the same trade as the 4-hour, so it's just for show. And that's true. It is just for show. There's no point in it. You know, I come in the morning, I look at my trades, and then I decide what's going to be in for the day. What's going to be in for the next couple of days. Do I need to take 50 trades a day? No. All I need to do is put a stop loss in place, put a take profit in place, and leave it. Let it ride, and then walk away. Go and do whatever you need to do, and then come back and check those trades out. How do you think I find so much time to make these YouTube videos? I mean, seriously, if I was 5-minute trading, I really wouldn't have time to make these YouTube videos because I'd be sitting watching the charts all day, freaking out about every single movement and buying and selling all day long. Whereas now, all I need to do is come in and choose my trades, put them in place, put the plan in place, leave it, and see what happens. Then I've got loads of time to do whatever else I want to do. That's why I find the time to do this. The guys who are 5-minute trading, who are making as many videos as I am, actually don't know where they get the time to do that, to be fair. I mean, it's pretty difficult. But let's have a look at gold. And if we take this down to the 5-minute chart, well, firstly, on the H4, it's bullish, right? It's going up. It's now bullish. It's broken structure. It's moving up. So our choice is that it's now bullish. So we're going with the bullish trades on that. I'm going to have to make this just a little bit smaller so that we can see where we stand. So on gold, on the 5-minute charts, what are we looking at? What we're looking at here is the support down the bottom here. So if I was on a 5-minute trade, there's a support at the bottom here. I'm looking for bullish trades. I'm not looking for bearish trades because everything's bullish today, right? There's the resistance on the top here. At the moment, it's working its way down. It's working its way down to the lower levels. It's broken that structure, most definitely. So it's moving down. What I'm waiting for is for it to get to the bottom here. If it gets to the bottom here and bounces off the support, then we're going to have a buy. Then you're going to buy it out of this level and buy it going to the top. So in other words, what I'm actually saying to you is you can, I'm not saying you can, I'm saying it is possible, for example, to use our price action system on 5-minute trading and possibly even be successful with it and do okay and even make a profit. But you're still trading on 5-minute charts. You're still trading on insanely high risk with very low, small pip amounts or contract amounts or whatever the case. And your risk is that much more. Now, a lot of people will say to me, but Rob, on the 5-minute chart, instead of risking $500, I'll risk $50. But that means for every one trade that I take, you've got to take 10 trades. And 10 trades is a lot of work. So you take the 10 trades and then you lose one badly, and then it's going to destroy all the 10 trades and all the work that you put in. So I hear you when you say, but I can put less risk in. But when you're putting less risk in, you're putting more work in, right? So what you've done is created a 16-hour-a-day job for yourself. Now, don't tell me you can come in and trade for 2 hours and make your money, because you're going to come in for 2 hours to try and make that money, whether it be $200, $500, whatever your target is. And then instead of making it, you're going to lose it. And if you lose $500, the next day you've got to make $1,000 because you lost $500 a day before, and so on and so on and so on. And it's actually worse than that. So that becomes an insane problem for you. So you can't trade that way. You can't say, I'm going to come in and trade for 2 hours, make the money and go home and sit and make tea. That's not how it's going to work. So now you have a new situation. You have a completely different problem. And that is, I'm going to be taking 10 trades instead of taking 1 trade. So now you can say, well, I'll tell you what, I'll just trade the 5-minute charts, but I'll trade them with the full risk. In other words, I'll trade them with $500 per trade and trade them the same way I trade the 4-hour charts. But then, as Blue Mango said earlier, then you're just going to get swallowed up and taken out of the trades really, really quickly. It's going to take all your money. You're going to lose all your money very quickly. 99% of traders lose money there. And then if you drop and you do decide, okay, I'm going to, instead of risking $500, risk $50 per trade, imagine the amount of work that you're creating for yourself. Now, the next amount of work that you've created for yourself is, I can take a trade on my swing trading, leave it, walk away, make YouTube videos, go for lunch, go to the beach, do whatever I want. But if I'm on 5-minute trading, I literally have to sit here and watch the candles. I literally have to sit here and watch the trades and watch what's going to happen next. Because if I don't, this is just going to get me taken out. There are those that say, well, if you can do it on swing trading, you can do it on 5-minute charts. I can come in, place the trades in place, and place my trades and say, okay, I want to go long here, I want to go short there, and leave it and see what happens. You can do that. Of course you can. But nobody's going to do that on a 5-minute chart. And the whole reason you're on the 5-minute charts is because you want flashing lights, because you're looking for those flashing lights, because you're looking for something to happen. So what's going to happen with gold here? Really simple. It's going to come down. It's going to come down into support. So what am I going to do? I'm going to take a trade and say, well, I'll tell you what, I'll take a trade long at this point with a stop loss down here below my prior low, with a view to it getting up to resistance again, and then see what happens. Walk away, leave the trade. I could try and do that, but it's a 5-minute game. So a 5-minute game, I mean, it can just spike up and down really quickly and take out your trades. So trading with the 5-minute charts is going to take up more of your time than swing trading will. It's going to take up your life. Now, if you sit and watch charts all day, and this is why 99% of traders lose on 5-minute charts, it's really not because of the system. It's really not even because of the speed or because of the unusual amount of information, the low amount of information that's available to you in the candle. You don't get good information from a 5-minute chart, and also the high risk. Okay, so the small amount of pips that it moves, that's not the only thing that's going to cause you to lose here. The other thing that's going to cause you to lose on the 5-minute charts in a big way is actually sitting watching charts. Because when you sit and watch charts, when you take the trade, you look at the plan, you look at the whole plan, you look at the whole chart behind you, and you say, well, that looks like a decent trade. I'll get into that long and see what happens. And then it starts turning against you. And then you will immediately change your plan and think, and you'll only look at the end. You'll only look at this piece at the end here and say, I got in green there, and then this happened. So you're only going to look at this little piece here. You're not going to look at the whole picture behind it that you looked at when you took the trade. But now when you want to hold on to the trade, you're only looking at the end game. You're only looking at the piece right on the end. And that is where you go wrong, because you see the red, you think, I got to get out of the trade. So you get out of the trade, turns around, goes the other way, and you lose out. So 5-minute trading and sitting looking at charts all day can be detrimental to your bank account and to your health and to your sanity. It's going to drive you completely and totally insane. So what I always say is, why not take it easy? Why not just trade? Why not just swing trade? Why not just trade on the 4-hour or even the day? The day is also fine. If you want to trade on the day, you can, particularly if you work. That's the best one to trade on because you can just take the trades and leave them. H4, I take the trades and leave them anyway. So I look at it and I say, well, that's my trade. I'm going to leave it there, leave that trade in place and just go and see what happens. Why don't you just do that? Why are you trying to force the issue? 9 times out of 10, it's because you're bored and you need to see something happening because you expected something to happen. Because you see, I noticed what actually happens as well is when you watch YouTubers like myself or like other YouTubers, probably not myself, I'm probably the most boring YouTuber in the world. But you know, all these exciting YouTubers, when they put the videos out, it's all flashing and that candles are moving and things are moving up and down and everything's happening. So you get involved in trading thinking, well, that's good. I'm going to do that because that stuff's all exciting and all moving. And then when you actually get involved in the trading and you take the trade and then nothing happens, you think, but nothing happened. It's just standing still. You know, what now? What do I do now? What's next? You're kind of almost lost in space because you don't know what to do next because you've now taken the trade, you're sitting watching the chart and it's not really making the money yet or doing anything for you, in fact. So that's one of the issues, and that's one of the reasons why everyone is dropping down to 5-minute charts. So the big question is always asked, can you make money on 5-minute charts? And the direct answer is no. No, you cannot. It's been proven over and over again that it's difficult enough to make money on a 4-hour-a-day chart on leverage trading without the 5-minute charts. There are maybe 1 or 2 people out there that can actually make money on 5-minute charts. They're very risk adverse. They're very good at trading. They're very good at or lucky at picking trades. Maybe they've developed some kind of internal clock or internal system where they can pick trades well. They come out the other end looking quite hunky-dory. You try it, it's not going to work out so well. You know, I got out with my underpants on when I tried trading 5-minute charts, to be fair. I mean, I didn't lose. I didn't win, really. It was a bad patch as well because you didn't really come out with major profits. But I even tried using things like Ichimoku, Fibonacci, MACD with the 5 minutes to see if that would make any difference to it. And it doesn't. It doesn't make any difference because trading there and trading here is exactly the same thing because as I always tell you guys, trading is 50-50 no matter what you do. So the important thing is to be able to manage your trade. So the most important thing is to be able to manage the trade. Now, can you manage the trade efficiently on a 5-minute chart? Because everything's moving relatively fast and it makes it more difficult for you to actually manage the trade on a 5-minute chart properly and get the stop loss in place properly, to manage the stop loss, to manage the take profits properly. So that's why I say if you are going to trade on the 5-minute chart, you are actually going to have to drop it down to 1 or 2 products. You can't, maybe 3. Most people that trade on 5 minutes trade with maybe 3 products max, maybe 4. I remember I used to use 4 charts next to each other, and that was my trading, and that was it for the 5-minute charts. And then you get sucked in. I mean, you will sit in front of your charts the whole day, and you will be sitting there watching charts the whole day. This is a 5-minute on oil. So if I was going to trade a 5-minute on oil now, what am I looking at? So now there's your top. It's coming into resistance. So you're going to get a nice short on it now. On the higher time frame, we know that oil is a bit bearish at the moment. So if you're going to pick up a good trade here, you're probably going to want to go short on the oil at this level. So that's 81. And then try and pick up money down to this 80 level or down into this 79 level, probably this 80 level here. So there'll be another level just there, which is kind of a supply of money, which will come down into. So you'll take a short here with a view to it getting down to that level. And while we're talking, I'll leave that in place and let's see if it does anything. And it's not, even on the 5-minute charts when you're bored, while the candles are moving, and they're flashy lights and they're making you feel a little bit better, they're still not moving fast enough. They're still like just sitting there at the end of the day. If I took this trade on the next candle, I'd be sitting here going, okay, what's next? What now? The next thing, if it breaks up and breaks out of there, then it's going long, isn't it? So let's just see what it does. Because this is a 5-minute trade. The information that I'm getting here is insanely unreliable. It's useless. It's absolute rubbish. This information is based on so few trades that I'm basically basing it on a couple of trades and thinking, well, because of the lines there, it should move the other way. But the way I've based it, if I was trading 5-minute charts, is on oil in general on the day is bearish. So I'm looking at the bearish trade, and with the hopes that it will follow in that direction eventually. So if we get a red candle next candle, where maybe you're going to get a good short trade down to that level. I'm not going to take the trade because I don't trade on 5-minute charts, and I'll just be messing around with my own system. I just want to see what this is going to do. And if it does go the other way, you can see for yourself how unreliable 5-minute charts are and how they're not really that solid. I mean, like I said to you, I've actually tried on many occasions with different systems, different charting systems, to prove that the 5-minute chart can be done, that it can be, that you can be profitable on it. A lot of people try and say that you can come in at open and you see this candle and that ghost candle and this and that the other, and then you're going to get this whole move to the upside and this run and that run. It's all BS. At the end of the day, you're not going to make money on the 5-minute charts. 5-minute charts are not the answer. That's not where the money lies. Okay, hi, Alex, 5-minute plus prop account, haha. Yes, whether you're on a prop account or a cash account, 5 minutes still going to take you out. It's going to take all your money. Tywald, hi. 5-minute chart traders who do okay usually trade with longer term trend and set their stops on the 1 hour or 4 hour chart. You know, here's the thing, Mick. If you're a 4-hour trader taking your trades on the 5-minute charts, I mean, you're basically defeating the object anyway, because you're just taking the trade on a 4-hour. So you're not really on a 5-minute. The whole thing about 5-minute trading is you're trading on the 5 minutes with a view to making a quick profit because you're bored, because you want to make as much money as you possibly can. There you go. There's the red candle developing. Let's see if it actually does go down to this level and do what it's supposed to do. Would be interesting to see it anyway. And we've got a few minutes, so we might as well check. But yeah, I mean, if you're going to trade it off the 4-hour and just try and pick your sniper entries off the lower time frames, kind of you're bullshitting yourself into believing that you're getting a better entry. You're not. You know, you're either going to take the entry based on the pattern or you're not. Your plan is based on the entire pattern of the chart, not on that one candle or that sniper entry, or I'm going to get a 4-point better entry than I would have, or whatever the case. You know what? Take the trade, put your stop loss in place, put your take profit in place, leave the trade and come back later. 4-hour trade, day trade, whatever the case, a daily time frame I'm talking about. Relax, enjoy life, make the money, play the bigger amounts. You know, if you're going to try and play smaller amounts on smaller time frames, all you're going to do is keep yourself busy. That's really all you're going to do, is keep yourself busy. You know what? Learn to bake a cake. Do something else. You don't need to do that. It's ridiculous. It's a form of insanity to be doing that. Now, keeping yourself busy is not that difficult, by the way. You can find things to do. Look at me. I make YouTube videos. Goodness me, it's not that difficult. It's not like you're going to sit here twiddling your thumbs. Yeah, this is one of the worst things about trading that nobody ever tells anyone when they get into trading. The one thing they never tell you is, oh, by the way, it's boring. Oh, by the way, you're going to have nothing to do. Oh, by the way, you're going to take a trade and then you're going to think, oh, what now? So you can spend a lot of time actually doing research if you want to, researching your next best trade or where things might happen, watching some news, getting some information about finances, learning about the market. That's why I learned so much about the market, is because I had nothing to do other than learn about the market. So that's what I did. I learned about the market. I spent all my time learning about the market. I see a lot of people getting up at 3:30, 4 in the morning, as I've said in my other shows, and I ask myself, well, what are you doing? Because they say they're preparing for the market. Oh, you know how I prepare for the market? I get up and I have a cup of coffee. I get on with it. You know, I got tons of time during the day to work out what I need to work out within all the other trades. I don't need to get up at 3:30 in the morning and do some kind of odd research for the day and try and figure out which way the markets are going to go. I've already got a good idea from all the research I did the previous day. How much more research do I want to do? How much more research do I want to get involved in the trading? All I do is I have a look at what's out there, what's going on. Very simple. Put my resistance in, put my support in, and take my trades. That's it. End of story. The trades are in, they're happening, and that's it. I mean, what more do you want me to do? There's all this jargon that we create for ourselves when when we're bored. One of the things we do is we create spreadsheets, we create systems, we create strategies, but you've already got a system, you've already got a strategy, and it's all in place already. Why are you creating new ones? Why are you overcomplicating it? So you start adding things, and then eventually you don't know what your name is because you got so confused. You've confused yourself to some insane level where you don't even know where you are anymore. Crazy when you think about it. You know, I just hate it when I'm trying to show you guys how tricky trading on the 5-minute chart is, and it goes the way it's supposed to. But it will. I mean, obviously you're going to get some trades right. You can't get them all wrong, and it is support and resistance is quite good. I mean, it does give you quite a lot of information, but you know, it's supposed to show you how it can go wrong, but it's going right. So it's going right. Okay, we'll see what happens. If it does come down to this level and take the money, then oh well, you know, maybe you'll all become 5-minute traders and think you're going to win. I don't know. Once I sized down and started trading daily 4-hour, 1 hour, 15-minute for entries, my trading results became so much better. And you know, one of the reasons your trading results became so much better with scaling down to the 4-hour, the day, the 15-minute, etc., is simply because you've got more time to think about it. You're more patient with your trades. You've learned to become patient. You can look at the bigger picture. You can see the bigger picture for what it is, but also the information in every candle has now become super reliable. It's become information that you can actually use in your trading, information that you can actually take to the bank and say, this is good information. Whereas in a 5-minute candle, the information that you're seeing is absolute rubbish. It's just a few trades. There's nothing in it really that's going to give you a decent direction. So that's one of the reasons your trading becomes better, is because you have a slower mindset, an easier mindset on the trades. You can take the trades that much easier, that much slower, with much more comfort, knowing that your trades are in a good place and you can manage the trades properly. You can also leave them for a few days. You also don't need to take 50 trades a day. You can take 2-3 trades a week, maybe less if you want to. You can risk more per trade, so you can just take that trade, put it in there, we'll leave it with the risk, and eventually it'll make you the money, and then you take the profit off of it. That's as easy as it can get. When do you usually enter the market? And you see, this is a great question that Mick asked. When do you usually enter the market? Asian session, London session, or New York session? Okay. Now, I love your question. And the reason I love this question is because I live in South Africa. So for me, that question is so relevant. I used to think, what session am I going to enter in? How am I going to work with this? Should I enter in the European session because it aligns with my world? And how do I trade the American session because it's like at 3 and 4 o'clock in the afternoon, depending on the time of the year? And the Asian sessions are just happening when I'm sleeping. I mean, sometimes I take a trade on an Asian Forex pair or something, and I wake up in the morning and it's gone completely pear-shaped. So what do? What session should I trade in? But then the aha moment came to me. I don't trade on 5-minute trades. I don't sit and watch charts. I don't worry about what's happening all day long. So what does it matter what session I trade in? And then I realized, because and the reason I think like this is because I don't live in America, because I don't live in Europe, and I don't think about those things. You see, for me, I've always lived outside of the norm. So living outside of the norm makes me think a little bit differently. So I'm thinking I can trade all of those markets and it doesn't matter, because what I'm doing is I'm trading on the bigger picture, as you guys know. So for me, what I'm doing, I'm just going to close that for now and just, I'm looking at a big picture here. So I go to gold and I say, it doesn't matter what session I'm trading in. I'm looking at gold in general. I'm saying it's in support on the H4. I'm trading on swing trading, and every time it bounces out of that support, I'm going to buy. And then I'm going to hold the trade. I'm going to leave the trade in place with a stop loss and with a take profit, and that's my trade. Doesn't matter to me where it is in the world, what session it is, or how it's going. The thing that you do pick up on, though, is, for example, if you're trading on an S&P, a NASDAQ, or something like that, obviously you're going to get movement when the market opens in the afternoon. And if you are available to see it, then it might be helpful to have a look and see what's happening at that time. But as well as the European session in the morning, for example, from my side, I can open, I can see what's happening on the DAX, the FTSE, that sort of thing. And I can see what's happening with the European currencies. The Asian ones are usually always happening when I'm not around. But it doesn't matter, because I take my trades based on a position. So I used to call myself a position trader. A lot of people call it swing trading now. Now, the interesting thing about names is they don't matter much as long as you're making a profit. But swing trading to us in my day was always, what it meant was you got into the S&P 500, for example, and every time it was at the top, you sold. And then when it got to the bottom, you turned the trade around and you went long. And then when it got to the top, you turned the trade around and you went short. That's what we referred to as swing trading. Nowadays, it's something else. And what we're doing now, what you call swing trading now, we normally would call position trading, as golden oldies, as we put it, because I've been doing this for 34 years and that's just how we name things. So for me, position trading is the right name for it, because you would take a position, leave it in place, and you are positioned in the market. I mean, that's basically what it means, okay? I see a lot of people get confused with the name futures as well. And futures is what you're trading with here. Futures is a market designed for leverage, okay? But futures are used with everything. You know, it's not indexes. Indexes are something completely separate. The futures are everything, your Forex, your commodities, everything. It's all mixed in, and it's mixed into CFDs, contracts for difference as well. They're based on futures, okay? So, you know, people get mixed up with terminology and names. Names and terminology don't mean much, and they don't mean anything at all, to be fair. It's not that important. So don't get caught up in it. Don't get caught up in abbreviations and all that. You know, I noticed a lot of times with the courses, people get really caught up, especially in the courses, with abbreviations and names and terminology and things like that. Not just in trading, but in many other cases as well, because it somehow makes them feel more intelligent or something to that effect. I don't know, when they're talking to other traders, because they don't want to feel stupid when they're talking to another trader, so they want to know all the terminologies and things like that. So they get caught up in studying all that stuff. It's a bit like when we used to go to school and we used to learn history, and all they taught us was dates. And I used to think, I don't care about the dates that much, but every exam they would ask you all the dates, and I was like, that's just insane. It's just dates this, dates this, dates that. You know, the terminology is not important. What you need to know is the overall picture, the overall story, and you need to know how to trade, and you need to know how to make a profit. You need to have a plan, you need to have a business plan, and you need to make money. What's the point of knowing all the abbreviations and all the little fancy things if you don't know how to make money and you're still losing? You know, I find many of these traders out there that know all the fancy terminology and all the information, all the names of things and whatnot, and they think the sun shines. No. Anyway, clever. The clevers, as I call them, let's be fair, most of them are losing anyway. So what's the point? What's the point of being clever in the market if you're not actually winning? Okay. When do you... okay, or has it gone pear-shaped? Within 2 to 5 minutes, just going 2 big candles just destroyed your... Within 2 to 5 minutes, just 2 big candles just destroy your trades. That's exactly it. I totally agree with you. Couple of minutes and it can be over with that, and you're going big money at it. You know, it doesn't help trying to trade smaller. Like I say, you're going to end up trading more trades. So please give me money, I'm in debt. Sounds fair. I mean, people just give money away, don't they? They just give money to people. I mean, that's just fair, isn't it? I mean, wow. I wish somebody had done that for me. Just give me money. That's great. Lovely, lovely. Yeah, we're reading your comments, and yeah, don't you think that's a bit forward? Goodness me, dude. Oh no. Yeah, it's my life. Yeah, okay. All right. So the oil, as you can see, is now, if you were going short here, you're thinking, oh, what's happening now? But still, you know, if you're a board trader, still nothing's happened, has it? Nothing's happened yet. It's still sitting there, still doing nothing. So it hasn't improved your life in any way, shape or form. A lot of people came to me and said, nah, but I can go in for 2 hours and I'll make $200 and I'll make that every day and it'll all be fine. I'll just make money that way. It'll be okay. Yeah, you got it. Yeah, some of the things I've heard and some of the things I've seen, it's just insane. I mean, the one where I told you guys, the guy said, no, you just wait for the bottom of the market and you just throw the kitchen sink at it and yeah, you just make money that way. That's so easy, isn't it, eh? I wish I'd thought of that. Ooh. But yeah, on the 5-minute one, come in for 2 hours a day, make $200 and then just go and relax. No, it doesn't work like that. Never does. You come in for 2 hours, you lose $400, dollars or whatever it is, and then you're in trouble. Now what do? Do you sit there for the whole day and try and get it back, or do you come back tomorrow and tomorrow you have to make triple that to try and make it all back? Yeah, it's insane what people think up and whatnot, and it's been proven over and over again that you just can't make the money on these 5-minute charts. It's not possible. Oh, come on, Blue Mango, you adding to it as well? Brilliant, you made my day. Send some my way as well. Come on, lads, just give me all your money, man. Oh, I love that one. I won $5,000. Okay, me too. Me too. Give it to me as well. You want to put it in a time? Yeah, I can. Sorry, man, I'll do that. Oh, yeah. There you go. Done. I put him in a timeout. There you go. Sorry for leaving him there for so long, guys. I guess I should have done that earlier. But I was having a laugh, man. That was funny. You got to admit that was funny, no? Come on. It was quite cool. Give me 5,000. Yeah, okay. Yeah, I just love it. I think that's brilliant. Absolutely brilliant. Okay, there you go. So now you see on the 5-minute chart, you see how the oil is actually going out here. So it's going to go, it might actually go the wrong way. And then you can see how volatile this is on the 5-minute chart and how badly it can go. It's going to start moving out the wrong way now. And you'll clearly see that, you know, the information you're getting is just not good enough. Because there you would have looked at this and would have said, there's a resistance, 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 should go down, support, 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 it should go up. So you take it there based on, you know, it's a bearish, the oil is bearish. You take it there and there you go. Look how quickly it moves up. Look how quickly it's going against you now. Because your stop loss, let's say your stop loss is at 81.5, right? Just to be on the safe side. Let's see what it does, eh? Trump's fake peace talks failing. I guess they are, yeah. I guess they are failing, most likely, most probably. Man, I don't know what to think anymore as far as that goes. I don't know whether it's some kind of manipulation or if they've got some other agenda. But why is it one day we got peace talks and the next day we don't? It's kind of, we don't know what's going on or what their thoughts are, why they're saying these things. But I mean, is he blatantly lying or what's going on? Why? And why? Why can't we just see things for what they are? Or are they trying to keep the oil price like balanced for some reason or another with this whole scenario. Because now I read articles now, yeah, it's your fourth chance. And I mean, how many chances is he going to give them, to be fair? Kind of crazy. He just keeps on giving them chances over and over and over again, which is quite interesting. So there you go. It's starting to break to the upside here. Now, you'll all agree with me that that would have been a short trade on a 4-hour or on a longer time frame. I mean, you would have looked at it and said there's a short trade. And as I've said to you, the information that you're getting in every 5-minute candle is only for 5 minutes, and it's very, 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 very poor. So you're not getting decent levels. And, you know, if you're looking at the history here, you're only looking at the 5-minute history. I mean, this is like one candle on the 4-hour or the day chart. And so you just don't know which way it could go. And this is such a small move at the end of the day in comparison to the moves that you would have on the higher time frames. So you can trade with much bigger amounts on the higher time frames. You can leave them and you can relax. But that could be caused by someone dropping a spanner, man, and they're just like, oh, there, let's just move it that way and move it out. So yeah, no, can you trade on the 5-minute time frames and be profitable? Probably not. 99% of you are going to lose on the 5-minute time frames. For those of you that have been successful, I got out of 5-minute trading when I realized that it's problematic, not because I lost, but because I found my way through it just fine. And I wasn't making a fortune. But I thought to myself, let me get out of this before it goes bad. Before it really goes bad. Because so many times I see it where the trader does okay, you do okay, you do okay, you do okay. And many times myself, you would take 8 trades, you'd be successful, and then the 10th trade, off she goes. Takes all the money back. It's soul destroying, by the way, to actually be successful for 8 or 9 trades, and then one trade just wipes out all those successes, because that's what happens with 5-minute trading. And I realized for myself that, no, you know, you can't be stressing like this. You can't be doing this forever. You're just going to get old far too quickly. So it's better just to leave it behind, move on, and go and do the swing trading that we all know and we all start with and we all learn with. Why do we end up on 5-minute charts? So it's quite ridiculous to end there. So now you can see it's building from there. It's going to break through that level and head to the upside. So now it's already trying to break to the upside and go. So now you're going to have a breakout trade when you would have wanted to go short. So that would have been your first stop out on the 5-minute charts, right? So a lot of guys will say, nah, but you got to wait for the opening of the European market or the opening of the American market or the opening of the, I don't know, the Bangladesh market. I don't know, whatever you want. And then you can start trading and you can trade for 2. It's all rubbish at the end of the day, all the same thing. I mean, it's not going to make any difference whatsoever. Everything Trump says about Iran has been so far off, it's ridiculous. Yeah, I gotta agree with you, it is. What do you think about CRT candle range theory? It's just another system. I haven't gone into it in depth, but it's just another system. If you find a system that you like and it works for you, then try it out, forward test it, see if it works for you, see if it's the right one. But all these things like Renko candles and all these other fancy systems and that I don't agree with. I don't like them at all. I'm a firm believer in keeping the candles as they are. And one of those reasons for me, the big reason for me is I can see a big red candle. I can see the wicks on it. I can see the bodies. I can see the strength. And you also have to understand with me that I've been at this for such a long time that I don't really want to change it too much. I don't want to mess around with all that rubbish. I need to see when things are low, when things are high, and that sort of thing. So there's so many systems out there. I've traded most of them. I must admit I haven't used that one. But, you know, I've traded hundreds and hundreds of systems. And one thing I realized at the end of the day, it's all the same. Whether you trade with a system, whether you trade with no system, or whether you just trade with support and resistance and a trend line, Whether you trade with Fibonacci, whether you trade with Ichimoku, it's all the same. It's not any different. But what you're doing is you're trading against another trader, right? So there's another trader out there who's got a system that he believes or she believes is the best system on earth, and it's going to give them the edge over the market. And then there's you with your system, and you believe you've got the best system on earth and you've got the edge and you're going to beat that person. So now you are in a game. It's like a football game. Now you are in a game, two different teams, right? You both want to win. You both want to score goals. You both want to come out at the end of the day with a profit. So you get out there and you get into the game and you start playing. Buying, selling, both believing that you've got the best system on the planet. Effectively, all the systems will work. All the systems are the same. What's important? The person that will win is the one with a better psychology. In other words, the one who manages the trade correctly, the one who has the patience to manage the trade correctly and make the money, and the one that doesn't have the fear of missing out or mega fear. That's the trader that's going to win over, not the system. It's not going to be Ichimoku beat Fibonacci or anything like that. No, it's going to be the trader with the right psychology, the trader who managed the trade correctly. Did you know you can put two traders in the same room with different psychology, of course, because they got different personalities, right? But give them exactly the same system, precisely the same system, and say trade according to this system. Maybe it's price action like this. Tell them both, trade to this price action, trade the same way. But both traders will react a different way to the trading. Did you know that you're going to achieve a completely different result every single time from both traders? That's insane when you think about it. So there you go, ladies and gentlemen. The oil here. We drew the resistance in, we drew the support in. We said we should have gone short there because it was on resistance, but there you go, 5-minute chart, it's gone long. It would have taken out the stop loss. I think pretty close to it anyway. Stop loss would have been up there, probably would have taken out the stop loss. So there's your first loss on 5-minute charts. So 5-minute charts are not the answer. That's not what you want to do. You see how close the price is, you see how close your stop loss is going to be in. And while I've been talking to you here, this would have all happened. In other words, that quick, that's how quickly you would have got taken out of your trade. Just like that, your trade would have been gone, over, no more. So I'm going to move away from this now and get back to normal and go back to our normal swing trading thing, which is where we belong. Now there's the oil. Okay, come down, come down, come down. So overall, oil is bearish, right? So it's come down, broken down, come back up, retested, gone back up, retested, big red candles down. Continuation pattern to the downside. Why do I say it's a continuation pattern? Because that is a continuation pattern moving to the downside. So it's going to break to the downside eventually. So this is a bearish pattern. So you took this, you went to the 5-minute chart and you thought, I know, I'll trade on the 5-minute chart and I'll try and make some money. And but the thing is, now it's decided to go long here and go up to the top here and then come down and then it'll break to the downside. But you could, if you were a, for example, 4-hour trader, a swinger trader like we are, you could take a trade here short and say, well, I'm going to go short here and I'm going to put my stop loss up here or wherever, and I'm going to put my take profit down here, walk away, leave it, forget about it, and not worry about those stupid little movements on the 5-minute chart, which should have stressed you out completely by now. You would have lost all that money that you could have risked on here and left it in, and it eventually will come down and make you the profit. The only reason I'm not going to do it on oil is because fundamentally, I just don't know what Donald's going to say next. So I'd rather just leave that alone for now. I took a US dollar ZAR trade. And because I'm in ZAR, and I took the trade long. Now here's a good example of why you don't trade on 5-minute charts, you see. Because for me, this is now in the support, right? It's in the support. Now you could do this on a weekly chart, you could do this on a monthly chart. You could say, well, there's my weekly chart, you know, it's kind of in my support. I'm just going to take a long trade and go. Because we're on an H4, we're going to do it on H4. I'm saying it's come down into support. It could go much further down into support. It could come all the way down here. But that's why I put my stop loss down there. Said to myself, do you know what? I want to take a long trade here because I believe that it should. Take a long trade here. Put it in. Forget about it. Leave it for a few days. Let's see if it makes a profit. That's swing trading. Whereas 5-minute trading, I'll probably have lost my money already. Okay. There you go. Do you just use trend lines, and what's your confirmation in swing trading? I saw a regression channel. Did you use it? It's a good indicator that draw automatic trend lines. Never draw automatic trend lines, but anyway, what you got to do is it's really simple. And let me show you how I measure up a trade, any trade. It really doesn't matter what trade. We can choose just about any trade that we want to. I'm just going to look here for something that doesn't have too many lines on it, that we can actually put something on for you and show you what we can do. But yeah, all you got to do, I'm just going to take that trend line out of there just so that you can see what's going on. Take it to the day chart, right? Don't look for automatic drawings. It's very simple to see. If I put this on a day chart, let me take these levels out completely. Okay. And I know it's daunting for people that don't do this on a daily basis or haven't done this before, or, you know, I've been doing this for a very, very long time. I look at a chart, I see this Aussie dollar, New Zealand dollar, right? I see this chart. I see it's run along here. Big bullish run to the top here. I see it's running consolidation here. Immediately I can see the trend, the bullish pattern. I can see the consolidation. I can see the range. There's a top and there's a bottom here. I can see that I'm looking at a possible support and resistance level within a bullish range. Okay. But what I do normally is I use the trend lines within my support and resistance. So what I'm doing on the daily is I'm saying, okay, let me get my levels from the daily, my support and resistance from the daily. So what I'm going to do, I'm going to say there's a resistance level. Okay. That's pretty decent. I'm just going to take it back here. Just say that's a resistance level that I can use. I can say when it gets to that level, very frequently when it gets to that level, it likes to take the money, come down, take the money, come down, take the money, come down. Because you're looking for liquidity in the market. That's all you're looking for, nothing else. You're not looking for anything other than liquidity. If you want to know much more detail about this, just go and watch my other videos. I do have them down there with lots of information on them if you haven't seen this before. There's a support level on the daily. So now you've got a support. Now you've got a resistance on the daily chart. Why do I take it from the daily chart? Because all your institutional money, all your pros, all the big money is dealing on this daily level. They're looking at levels on that daily. Okay, that's where they get their levels from. So now you can pick their levels, where they are, where they're moving the money around. So you know it's coming down from there. You know it's going up from there. Put the candles back on, because the candles, you see, I don't have volume charts, I don't have RSIs, I don't have anything on my chart. So I'm using these candles to tell me there's a big red candle, there's a big green candle, gives me the volume, gives me the wicks, give me the buyers are getting back in, the sellers are getting back in, there's a small body in the middle, undecided. If you want to know more about candles, download a page off Google. The Google page will tell you exactly what candles are telling you, because you can read them like a book. Then I take it back to my H4. Now I've got this picture here. I know that that's my daily resistance. I know that that's my daily support. Now, what I use a trend line for is just to give me some direction. Okay, so I want direction. I want to know on this, and a trend line should have 3 touches. So I just want to know on this trend line here, if it breaks through that, it's counter trading, it's change structure, and it's breaking to the upside. If it stays below that, it's staying bearish, it's in a bearish trend. That's it. But you might want to use more than one trend line, because trend lines can move around. So I might want to say on a shorter note, you know, if it breaks through this one, it's counter trending and going up, and it can go all the way up to that one again. And then if it breaks that one further up. So I've got that much more information. It's in the support level. If I get a green candle coming out the support level, I buy. If I get a red candle coming out of the resistance level, I sell. Complicated, isn't it? You don't need any fancy trading systems. You don't need any fancy complicated lines. You don't need any fancy complicated anything. If you get a red candle coming out of resistance, you go short. You get a green candle coming out of support, you go long. You want to be a bit more technical, draw a trend line in, wait for it to counter the trend line, break above the trend line, gives you more confirmation. Make sure your risk to reward is good. You got good reward, small risk. Always manage your risk. That's the important part. You can't win with win rates. Win rates don't make you money. What makes you money is having a proper strategy. The strategy is make more on your wins, lose less on your losses, manage your risk, keep your risk the same on every single trade. You want to know more about that? Please go and watch one of my 40 million videos that I've made. I put it in most of them. I've repeated myself, I think, 1 billion times in those videos. So I'm sure if you watch them all, you'll get it. And it's quite simple. You know, everybody's always looking for a new shiny tool. They're always looking for that next best system, that new system that's going to come around the corner, and it's going to whack them, and it's going to make them such a lot of money overnight. This system is just going to be magic. It doesn't exist. There is no such system, unfortunately, because everybody's got a system. Everybody's got a system. And guess what? Everybody believes that their system is going to win. Everybody believes that their system is going to make them money. I don't believe that. I don't believe that support and resistance or these trend lines or the system's going to make me money. I don't believe that. I believe that these charts and this system, support, resistance, and trend lines, what it's going to do is give me the opportunity to manage my trade. It's going to give me the ability to see where my trade's going. It's going to give me the possibility to make money. In other words, now that I've got this, I can place my stop loss. I can manage my trade. I can place my take profit. I can see how much money I'm losing, and I can see how much money I'm winning with a simple system like this, because it really doesn't matter what my system is. So all I do in the market, all I ever do when I'm looking for a trade is look for liquidity. And that liquidity is in the resistance and it's in the support. I'm looking for that liquidity, looking for those, you might call them liquidity pools, whatever you want to call them, however technical you want to get. I'm looking for where the orders might be, because every time it gets there, they tend to move the money around there. And that's what I'm looking for that pro money. Do you know why I'm looking for the pro money? Because it makes up 95% of the market. And as silly as that sounds, retail traders only make up 5% of the market. Well, there's lots of us, but we don't have a lot of money. But the institutions, the guys who are dealing with your pensions and your savings accounts and all that, the banks, they got lots of money. And they make up the bulk of the account. And they're the ones that are deciding where the price turns and how the price turns. All you want to do is find where that level is and ride with it. Ride with the liquidity, because that's how you're going to make your money. Forget about all these fancy trading systems and all these little lines and crossovers and whatnot. I've traded them all, most of them. Some of them I haven't, but most of them I have. 98% of them I've traded. And believe me, I've given up looking for new ones long ago, many years ago. That's why there'll be a few new ones that I haven't looked at. But I did try and look at one or two of the new ones just out of interest for you guys or for anybody else, just to see what it's about. And I almost burst out laughing a couple of times. There's one new one, I think they call it the ghost candle. Wow. That's insane. Absolutely insane. I've seen some good ones, but wow, that's brilliant. Absolutely brilliant. What a load of old... Yeah, okay. Yeah, yep, the stop losses are tiny, just small, it gives you health issues. Trump family has a club with 500k joining fee. They likely get regular insider trading information. Yeah, no, sometimes... Yeah, I've often wondered about that. You know, that background information, that insider trading information. That's, I mean, you know yourself, if you're a family and you're a bunch of mates or whatever, let's say you just go down the pub, you sit around, you're chatting to your mates. There's no way you can keep it secret, is there? I mean, if something's coming up, you're probably going to say, yeah, you know what's going to happen? This is going to happen in passing. You know, that's what happens. And then that person's going to go, oh, wait a minute. If I take that information and I go back to the stock market and I do that, I could probably make a fortune. You know, that probably happens all the time. And oddly enough, innocently. They probably don't even realize they're doing it. And I've often wondered about that. You know, people that are in the game on the inside, you know, do they really keep it a secret? Because I mean, you know yourself, when you're sitting with a crowd of mates, you know, you're not just going to sit there and go and quietly, you know, if somebody says anything about it, you're going to talk, and it's going to come out, and something's going to come out that's going to have some effect. You know, tomorrow I'm going to tell Iran I'm going to bomb them, and I'm going to give a news conference about it. I'm actually going to bring out in the news tomorrow that I'm going to blow them up. And then you're sitting there thinking, well, if I go long on oil and short on the indexes, it might be a good thing. That, you know, that's kind of, I'm sure that's what happens, because I mean, they're human beings, they talk to each other. No, just yeah, interesting. I saw a regression channel is good in element. Understanding that your minimum time frame is 4 hours to break a trend. Yeah, I use 4 hour minimum. 4 hours is minimum. I don't go over 4 hours. Generally 4 hours, because I'm not sitting watching charts all day. I do not sit and watch charts all day. I put my trade in place based on this overall picture. So for example, if I take this trade long, okay, if this get the green candle out here and it goes long, maybe I'll wait for confirmation. Maybe I'll wait for it to break that trend there. If I see that happening, I'll take the trade, leave it, walk away, come back another day. Like I did with the ZAR this morning. It's going the wrong way at the moment, but it doesn't matter. It's in the support. I've taken the trade long, left it, and I'll see what happens later on. It doesn't matter to me if it's in a bit of drawdown, or if it's up or down, or whatever the case. It's really not that bad. The spread here is quite big actually on this one. It depends on the account. They do tend to differ a little bit, but yeah, there's quite a spread there. You can see for yourself what the spread is there. Imaginary, that's quite big. 5 or something like that. Yeah, it's quite a lot. But it depends on the account. This account, yeah, whatever. Actually, don't worry about that too much, to be fair. I don't worry about the swaps, the spreads, anything like that anymore. Because when I started trading, we used to have like a 7-point whole spread on a trade. It was crazy. And nowadays it's 1 or 2. It doesn't bother me that much, because as long as you're making a profit at the end of the day, that's what's important. As long as you can make a profit on it. Look, the thing is, if you're trading on 1 second charts, 1 minute charts, 5 minute charts, then the spread, that can be really important, because you need to get in and out rather quickly, and you're only playing with 10 points and things like that. But when you're playing on 4-hour charts and daily charts, you don't worry about it anymore. It's not that important anymore, because if you've got a one pip like spread and you're targeting 100 pip profit, does it really matter? The swaps might be a bit, you know, the daily costs and whatnot, that might be a bit tricky, because that builds up over time. Nasdaq is dropping fast for some reason, and is it? Okay, so have a look at Nasdaq. Could be to do with the news this morning that people are getting laid off. Oh, okay, there we go. That is quite a drop off, eh? So there look, there's a lot of issues with AI today, concerns about these AI companies. There's a lot of stickiness going on. People are worried about them. Could be that. And then they were talking about a lot of people getting laid off. Remember, I said in the members video this morning, for those of you that are part of the A team, I mentioned that the people getting laid off is not good news for these indexes, to be fair, because somewhere down the line, it's going to be payback for that. If people are losing their jobs, it means there's not a lot of money being made, which means they're not going to be able to give good earnings somewhere down the road. Now, when you take an investment or a trade or anything, your idea is to make a profit somewhere down the line in the future, right? Not to make a loss. So you're looking at future earnings, not past earnings. But when they give you the earnings of today, you look at the company, you say, well, that looks good. That looks great. That looks lovely, fantastic earnings. So I'm going to invest in that company. But what you're really going to do is think, if they gave such good earnings today, will they be able to do the same or better somewhere down the road in the future, like 6 months down the line, a year down the line, or whatever the case? So you've got to be very careful of that. And that can have an effect on this. So what people might be looking at is if an AI company is doing bad, or there's a possibility of something going wrong, or people are getting laid off, there'll be some concerns with the big money that's investing. You always got to think about the big money, because big money is playing with your pension, right? So they're taking big money and they're plowing it into the market. And that person's taking the risk. They're taking the risk of billions and billions of dollars. So they got to think for themselves, like, is this going to pay off in the future, or is this going to go bad? And if the company's looking like it's going to go bad, they're going to pull the money out of there and put it somewhere else, some other area of the market. But on a technical perspective, I did say this morning as well, though, that this has broken through the trend resistance, big green candle to the upside, lots of move, lots of volume, lots of power to the upside, big move, right? So that was a strong move. And then it lost momentum and it ran out of steam. What I did say was this is probably going to come back and retest, this level. So what you're looking at is a possible retest at this level down here before maybe going back up. But what you've got to be careful of when it gets back to do this retest, you've got to check whether the test wins or fails. So what you've got to look at is whether it's going to break to the downside and carry on down to this support level here, which it could as well, or whether it's going to bounce up and give you the green candle and bounce straight up here, in which case it would be bullish again. But if it breaks through here, then it's going to come down into the main support. Then you've got to see if this support can hold it, because if it can't, it could fall quite hard. And then if you look at the S&P 500 in relation to that, the S&P 500, similar story, similar color candles, because it's a similar product. It's broken to the upside. It's on a breakout trade, broke up, ran away. Now they're coming back to see if they left anything behind. They're coming back. Now the question on this one, very similar to the NASDAQ, slightly different though, but it's coming back to have a look at this resistance or support level. Now it was resistance, coming back to look now at this new support level and see if there's any money to be taken here to go back up again. Remember, this is all-time high, so there's no resistance level at the moment as such. It's an all-time high. You can't really call it a resistance level, can you? It's just the high. So if it breaks that high, it's going to continue on further. So the S&P 500 is also coming back to look and see if there's any money down here, or any further money down here. And even if you're trading with supply and demand, you can see there's a level in the support level here, which it's going to run with. And if you look at the trends on this as well, you know, you could say, well, let's see if it breaks to the downside here, but then you're sitting with exactly the same scenario as the NASDAQ, where it's going to come down, break through that, come down into support, and so on. So from that perspective, it could be just coming back for that retest, just to come and look for the money, because it can't just keep going up now, can it? And that's probably what's happening there. Okay. Indicators do work, but they get noisy. Now you're trading the indicator. Indicators do work, but they do get noisy. Yeah, they do. They do get noisy. Indicators do get noisy. I'm not really trading with, you know, a lot of people might call my support and resistance an indicator, or my trend line an indicator. Those are not really indicators. Those are just lines that you can draw. You can see where your levels are, to be fair. A proper indicator is like an MACD or an RSI or a moving average crossover. Yeah, proper systems or whatever the case. Support and resistance price action is pretty basic. The reason we draw these things in is so that everybody can see where the levels are. And it is much easier if you draw this in to see where the level is, rather than just leave the chart completely bare, which you can if you want to. You don't need anything on the chart. It's just easier to spot these levels if you draw these lines in. That's not really that much of an indicator, more like just so you know where the breakouts are and where the information is. Okay. What's up? Good to see you. Got here late. As long as you got here, that's the main thing. You arrived, came with your Uber, and you parked, and you got out, and you came in, and you were at the show. If I had a stage, you'd be up on stage right now. Right. Okay. Did you use any prop firm to trade? What would your suggestions to people make money on the prop firms? How do you decide to daily bias? Did you use any confirmations? Yes. Okay. So we'll start with the prop firm one, right? And the prop firm story, most of the people here know my prop firm story and why, or what my feelings are on prop firms. When I started making these YouTube videos a couple of years ago, I've been trading for 34 years, right? So for me, cash was the only way. The only thing to use was cash. There was nothing else. But many years ago, leverage trading came out, as you know it now, contracts for difference, futures, options, things like that. Okay. So we got involved in that, and it was a new thing, and we were all a bit reluctant, but we got involved in that. That was exciting. And then suddenly you could take $10,000 and trade $100,000. Wow, amazing stuff. I mean, imagine that. And everybody had said, don't borrow money to trade. There you were, borrowing money to trade. That's effectively what you're doing, isn't it? But then we had to learn about things like margin calls and how much you could lose in the market. And it was a whole new ball game, you know, learning how to trade with leverage. But then we got into it and we enjoyed it and we figured it out, and here we are. Then I started making these YouTube videos because I saw a lot of videos telling people that you can go into 5-minute charts and take $1,000 and turn it into $1 million, and Lamborghinis would fall out the skies, and they're showing you all these mansions and all these fancy cars and fancy boats and sitting on private airplanes and goodness knows what else. And I thought, I've been trading for a long time and I don't have a private airplane yet. So something's wrong, you know? Anyway, so either I'm stupid and a useless trader, or that's just not possible. So I started making these videos for you guys, and at that time I saw prop firms, and I saw prop firms come out, and I thought, what a load of old rubbish. These guys are just ripping you off. Now, my initial thought on a prop firm was that you're going to be trading with somebody else's money, right? So I thought that was the picture. I thought that what they were offering was that you get involved with them, and then you're trading with someone who's got money who doesn't know how to trade, and you can trade it for them, make a profit, you get a share of the profit. Sounded great, sounded good. And I thought, well, that's something that I could possibly do, but I didn't do it, right? I didn't get involved in it at that point. And then I found out that that's not the case. I found out that what they're doing is actually using your fees on a prop firm to make their profit. So I thought, well, that's a bit off. Okay, but you know, that was it. And I was like against it. I was totally against them. I thought, no, I'm not into prop firms. But then I realized there's so many traders out there. After a while of making these videos and talking to you guys and, you know, whatnot, I figured out there's so many traders out there that don't have any capital. There's no capital. And I thought, well, if you don't have any capital to trade with, then how are you going to get into trading? How are you going to get to work? And that's why you guys were all looking for these YouTube videos where guys are telling you can take $500 and turn it into $5 million. That's the whole point. That's the whole reason that people were getting caught up in that. So I thought, well, actually, if you think about it, funded accounts have got a place here. They've got a place in the middle. They've got an area that you can actually work with. And that is, for me, the scenario of you learn to trade, you get on the demo, you learn to trade. You don't have to go directly to your cash and lose it all, because once you go to real cash, you start losing because there's a different psychology, right? Even after you've done your course, you've learned everything, you've done everything, the minute you go to your real cash and you go and get in there and you start putting it in the market and you start trading with it, then suddenly you start losing. So I found that place in the middle for them, that place where you can put the prop firm and say, well, here you go. It's a good area. You get the prop firm account, you learn how to trade, and you only stand to lose the amount you paid for the account. So I found a place for them in the market, and I thought, well, they're actually quite useful. They're actually quite decent. You can use them for that, whether they're good or bad, as long as you get payouts from them and that sort of thing. Yeah, so if you're looking for a prop firm account, I've actually put a couple in my blog page. Don't forget, guys, in the description I have my blog page, especially for beginners, especially for those people who need stuff, right? And the reason it's not in the description is it's the whole mishmash of stuff. So I've put it all on one page on a free blog. It's not a special blog or anything. It's a free blog. There's a page there. You can go there. You can find my Facebook accounts, my Instagram accounts. You can find other things that you need for trading platforms, and also a few funded accounts and things like that. So go to that page and go and find it there. it might be of some use to you. Anyway, that's my feeling on prop firms. They have become useful to me now in that sense. And I actually took on a few, if you've watched any of my previous live shows or videos or whatever, I took on a few to do a few challenges, to try a few things out with you guys and to play around on the markets and what have you, so that I wasn't messing around with real things. Okay, and then the other question was, how do you decide the daily bias? Now, that is something that comes with experience, okay? Daily bias, right? I look at the markets for what they are, but the first thing that I do, and when I always tell you guys, don't worry about the news, don't follow the CPI data, don't do that. What I mean is don't follow the narrow-minded, like today stuff, you know, like we're gonna the jobs figures and all that stuff that I used to hang my hat on. I'd wait for every Wednesday, every Thursday, every Friday, non-farm payrolls, jobs figures, all that stuff, CPI, all that stuff. That stuff is just going to mess you around and move you up and down. Now, what I look at is the big picture, the big news on the bias, what's happening in the market. So the first thing I'll do is just go and have a read on the market, okay? Maybe Yahoo News, CNBC, Bloomberg, whatever. Just go and see what's going on, what's happening, what's the general consensus in the market, what happened while I was asleep, right? That gives me a bit of fundamental bias. Then I can come and have a look at the markets and say, well, you know, to be fair, technically you're trading on the charts every single day, so you kind of know where things are anyway. But a good thing to do is just have a look on the day and sometimes on the weekly, just to give yourself the bias, right? So you can clearly see on the weekly, if you would, let's say it's the S&P 500, the bias is bullish, it's to the upside. On the daily, the bias is bullish, it's to the upside. We all know that the news, while pretty positive, there's a little bit of negative news in there. There's a little bit of iffiness, right? With regards to AI chips and things like that. A few stories going on in the background. We know that the war's quiet, so that's okay. So what we're looking at here is, well, this is very bullish. Probably come back to retest. If nothing big happens, probably go up. Then I've already got my bias. I know that I'm kind of bullish on it, but I'm also kind of bearish on it on the short term. Risk to reward, I don't want to go short. I'm waiting for the next long trade. So that's my bias now. It's called buy, but not yet. Waiting for the next long trade. So even on the NASDAQ, which was falling quite hard just now, you're looking at the NASDAQ and you're saying, well, what's my bias, right? So the bias is bullish because look at the bullishness, right? Big run to the top. So what you do here is not go short because your risk to reward is terrible, right? So my bias is wait for it to come back and give me a bullish signal. If it doesn't, and it goes to the downside and it keeps on going down, well, then it's bearish and I haven't taken any trade and I haven't lost anything. But my bias is still to the upside at this point, right? Then if it breaks that level, goes to the downside and gives me a breakdown trade, oh, well, then my bias changes to the downside because then there's clear change in the market and a clear change in structure. What you've got to look for is that change in structure. That change in structure is very, 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 very important, right? Because that change in structure can make all the difference to the trades you're going to take. So if it gets down here and it changes the structure to the downside, then the bullish bias starts to fall off the cliff and you start to think, well, maybe it's not so bullish anymore. Maybe it's a bit bearish now, you know? So it comes with time, it comes with feeling, it comes with gut feeling as well. Gut feeling has got a lot to do with this, right? Not a lot of this is done just on lines. You don't trade with lines. You're trading against other human beings. There's other people out there that are buying and selling. So when they put their orders out there, they put a little sign outside their shop that says for sale at this price. That means it's for sale at this price. So, you know, you want to be looking for things like that. That's quite important. Right. Okay. Rob, what is the psychology behind a retest? Trying to understand the thinking behind the lines. Oh, okay. The psychology behind the retest is this. The retest is for, I know I say it sometimes when it's in the resistance and support, but it doesn't really apply to that. What it applies to is, for example, a move like this one on the NASDAQ. You see that short, big red candle down, and off she went. She ran away. So think of it like this, and maybe this will help. Now, every time it hits the support, it goes up. Every time it hits the support, it goes up. Every time it hits the support, it goes up. Every time it hits the support, it goes up. So think of yourself as a prisoner in a cell, chipping away at the wall to freedom. Chip, 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 chip. You got your chisel, you're chipping away, or your spoon and your fork or something, you're chipping away at the wall trying to get through, right? But the wall's pretty thick. That's taking a long time to get through that wall, and you're chipping away, chipping away, chipping away. Eventually, you make a hole in the wall, and you break through, and you run away, and you're running. You see what's happening here in trading is the money's running out, or the confidence is running out in the direction. So here you are running away, and you think, oh, I forgot my wallet. If you have a wallet, forgot my wallet. So you run back to the prison cell, okay? Run back to the wall to check inside if you've got it there, so you can pick it up and then run away again. But when you get there, the prison guards are waiting for you. They grab you and suck you back into the prison cell, okay? Put you in a new one so you can start again. Or you get there, no one's waiting for you, you find your wallet and you run back the other way. Then you're going to keep on running because you don't need to go back a second time, right? That's the psychology behind it. So effectively what's happening is when it breaks down, what's happening is it's running hard. But what's happening with that is it's running out of confidence, running out of steam. You see, there was a lot of money here, a lot of money. So think of it like a pressure cooker. It's pressuring. There's lots and lots of money in this area. When it breaks away, it just poof, let's go. All the orders get taken, all the stop losses get taken, all the orders that were there get taken, just shoots it down. But there's a point where if you put your order in, you're going to put it in at this area, but you're not going to put it in down here. It's just too far away. The orders run thin. I mean, if you've seen the order book on the side of your share trading or you're investing or anything, you'll see the order book runs thin as it gets to the end, right? So it's going to run thin. So eventually it's going to run out, and then it's going to come back and look for more money. It's going to come back and look for more orders. It's going to come back and look for that liquidity. And if it's not there, if it's gone, it's just going to go straight back to where it was and find its way back into these higher levels again. Go back into the old area where it was in the first place. So that's the psychology. Let me know if that in the chat, if that works for you, if that makes it slightly more understandable for you. Okay, I know it's not simple, but you know that's how it kind of works. Okay, a very important question. How do you feel, and what do you do after taking a loss or a series of losses? Now, this is that's a good question. And this is the most serious thing that a trader is ever going to feel. And I'm actually bringing a video out on something like this, on this whole scenario, when you take a loss and how to feel about a loss. You see, the difficulty that every trader has is, especially if, let's say you're you're a beginner, you've just started trading yesterday, and you put $2 on the market, $2 whole dollars, and you start losing it. You immediately start stressing, you start sweating, but it's only $2, and you're thinking, what's wrong with me? What's wrong with me? Why am I losing? It's because we build a thick skin. We build a threshold as we go through time. And the longer you're at it, the thicker that skin gets and the higher your threshold becomes to winning and losing. But yes, the psychology of losing is a very difficult thing to overcome. When you don't know that you're going to take losses, when you can't believe that you're actually going to take losses. And this is where the difficulty comes in, is you get into trading and the first thing they tell you is that you're going to have a win rate and you're going to make money with these charts, with a system that they give you. So you pay $3,000 for this course, you go on this course, and they convince you that if you just trade with these lines, you're going to make loads and loads and loads and loads of money. The thing is, it doesn't happen, and it doesn't work. And when you were expecting to make 10 out of 10 wins, you have a heavy loss, and it psychologically destroys you. Oh, one of the worst ones is when you had 8 wins and that 9th one just wipes out all 8 wins. It psychologically destroys you. It's very difficult to handle that loss. In some cases, it's actually worse that if you were in profit by $30 and you took the profit when you were targeting 1,000, then it goes to 1,000 anyway. It's even more psychologically destroying, because you think, why did I get out at $30 when I could have made 1,000? So yes, it affects your psyche. Now, the way around this is by using my simple business plan. That is, train your brain to understand that you're going to lose half your trades. Once you've done that, work out your threshold of loss. How much am I prepared to lose per trade where I'm kind of still comfortable, even though I know I'm going to win? Okay? Because it shouldn't really matter, but it does. So work out that amount and say, well, I'm prepared to lose $1,000 on a trade. I'll be okay with that, knowing that on the other trades I'm going to win. Now, the difficulty with that is it can change from person to person and the amount of time you've been in the market and that sort of thing. But if you understand 100%, if you are clear on it, that you're going to lose 5 out of 10 trades, then you will be that much more comfortable when you take those losses. So in other words, I'll lose $1,000 per trade on 5 trades, I'll lose $5,000, but I know that on the other 5 trades, I'm going to make more in my wins, and I'm going to have a bigger win. So I'm going to have more money in my pocket on the other side. So in other words, I'm going to make $10,000 on the 5 wins, and I'm going to lose $5,000 on the 5 losses. I'm going to be $5,000 in profit every single time. So therefore, it really doesn't matter if I lose that $5,000. So then when I take $1,000 loss, or I take a series of losses, I kind of understand that it's going to come back to me. It's going to be in profit sometime really soon. And that's the difficult part to understand, and that's the difficult part to get your mind around. But you just have to get your mind around that particular situation. I mean, just last week, I had a difficult start to the week. As you guys know, it was a difficult start to the week. I had a couple of trades that just were going against me. I was just looking at the market and thinking, really, come on, man. But luckily, I've been doing this for so long that I know that, you know what, doesn't really matter, because I know it's going to come back. And you know what, by Thursday, boof, everything's back in the bank. Everything's going well. Everything's going swimmingly well, because that's how it works. Forget about the lines. Forget about these charts. These charts are meaningless. They're just there to help you manage your trade. You just need to make a profit. So in other words, if you manage your risk and you keep the risk the same on every trade, and you make a bigger profit, then as you know, then you're going to make your money. Once you work that into your psychology, once you've worked that into your understanding, then it all changes. And then a series of losses won't destroy you so badly. And also, a good way to overcome a series is if you're losing on a regular basis and your stop losses are getting taken out too quickly, put wider stop losses in, target less wins, less profit, okay? So try and target 1-to-1s rather than 2-to-1s. Try and, for example, you know, a lot of people will bring their stop loss in close so they can make more profit. Don't do that. Rather put the stop loss further out, make less profit, and try and push the profit when the profit's in place. Try and relax it a little bit, and then try and squeeze back in again when you're starting to make a series of losses. Because a series of losses can destroy you psychologically. They can actually make you want to give up. And that's the last thing you actually want to do, because believe me, in the 34 years that I've been trading, I've probably wanted to give up 34 times or more. And every time that I did give up, I came back. gave up, came back, gave up, came back. Because it's addictive, you come back. But for the last 20 years, it's been pretty good, so it's been okay. That first period, tricky, very tricky. In and out, struggling. It's not easy, guys. It's not straightforward. It's all up here. It's all in the mind. It's all in the psychology. It's not. I'm no genius. I'm no trading genius. I've just been doing it for so long. That's all. I'd love to think that I was a genius, but I'm not. Okay. Hi Rob, greetings from the UK. If you're looking to buy from a support level, does the green bullish candle have to leave your support zone? It's best if it leaves your support zone, but the most important thing is that the green candle actually closes and you get a second green candle growing behind it. That's the best way. And then, of course, if you really want to be sure, you can use the trend line system into it. In other words, if it breaks the trend line up, then you've got structure breaking, and if the structure's breaking, you're good to go. But I'm not one for waiting for tests and retests and things like that quite frequently. Often, if I see the green candle, I see it going that way, I see it coming out of support, I'm all in, I'm going, you know. So yeah, you can do it that way as well, because at the end of the day, it's only a means to manage your trade. It's only a means to give you that ability to manage it and try and make a profit with it. So it really doesn't matter. It's just another line in the sand. Okay, so don't get all caught up in that. If you can, just enjoy the moment and take the trade. Take the trade. Take the trade. Take the trade. That's the important thing. If you're looking to take the trade, take the trade, and then you'll make the money. Hello everyone, I was watching from the TV, now I'm in front of the PC again, ready from the trade. Watching me from a television, ooh, you can see my big face there, not good, eh? Thank you for your answer, pleasure, no problem. I don't mind answering the questions. As I always say, join us on the live show, bring your questions, bring your charts, let's have a look, let's see what we can do, and let's see if we can make it better for you and easier for you at the end of the day. Do you always use trend lines? Any tips? Well, I like to use trend lines within my support and resistance, but I don't always need to use them. My opinion of a trend line is this: if I'm not 100% with feeling it in myself, if I say I want to take a short trade here and I'm thinking there's a nice big red candle, but I'm not 100% happy that it's going to happen because it just keeps on hitting this level, you know, then I'll take the trend line and I'll draw it through there and I'll say, when it breaks that trend line, I'll take the trade. Okay, that's what I draw them in for. So I don't always use them, but and also they just give me a general picture. But it also gives me a general picture whether it's staying in trend or whether it's breaking out of the trend and going the other way. So that's also of some importance to me as to which way it's going. So I look at it as, okay, it's staying in trend and it's going the same way in the trend, so I'll stay in the trend and I'll follow it, or it's breaking the trend and it's going the other way. Do I use it on every single trade? No, I tend to sometimes change it and move things around, and sometimes I don't even bother using the trend lines. Let me just see, like for example on the oil here, that's just a short straight down. US dollar ZAR, this one, no trend line here because I'm quite confident on this one, for example, that we've got resistance, support, resistance, support, resistance, support, resistance, support. So for me, I'm just going with, oh, it's in support, I'm taking the trade out. And clearly I didn't wait for the trend line. I didn't take the trend line and draw it through here, because then I would have to wait for it to break through there. I've actually just got into the trade straight away because I'm quite confident on this one that it'll probably turn around and go up at some stage from the support level. But sometimes I get those trades where I look at it and I think, I'm not really that confident here. Maybe, just maybe, I should wait just a little bit and then and see if it's going to work out in my favor before going down that particular road. Okay. So that's basically what I use the trend lines for. I take the trend lines and I go, yeah, all right, I'll see if it breaks the trend, and if it breaks the trend and it goes to that side, then I'll take the trade. That's what I use it for. Should we also reduce our position size after taking a loss or a series of losses? What you're going to watch out for, this reduce our position size after taking a series of losses. If you're going to change your risk on an account, make sure that you're doing it on an overall basis, on the entire basis, not just on a few trades. Okay. If you change the risk amount, let's say you're risking $1,000 per trade, and you decide, I'm having a bad run here, I'm going to reduce it to $500 a trade. Then what you've got to do is say, well, that's my norm now. From this point on, every single trade is $500 a trade until such time as I change it back to $1,000 a trade. You can do that. You can reduce the risk. When you're in a profit, don't reduce your risk in a profit. There you want to increase your risk when you're going up. When you're making money, just keep on pushing it up and keep on making more money. But yeah, per trade, if you decide things aren't going so good and you want to change your risk amount, yes, you can do that. You can actually turn around and say, do you know what? I don't want to risk this much money anymore. I would prefer to sort of back off a little bit, reduce my risk down. No problem. Of course you can do that. But then you must just make sure the whole account, don't just do it for one trade or two trades and then bounce around. Try and keep a consistency on the risk level. Try and keep it on a consistent level. Okay. I think about martingale system. For example, I begin with 0.1 and then I took my stop and then 0.2. I don't like the martingale. I'm not a big fan of it. Particularly as it kind of relates to a dollar cost averaging and a loss more than anything else. And what's the point of that if you think about it? I've looked at it in detail. I've looked at the martingale system in detail, and I've looked at it and said, if I take this long here, okay, so let's say I normally would take 100 points, right? So I start at 10 points, and then it goes to here, and then I add it to 20 points, and then it goes, but look at that candle, it shoots up, and it gets all the way here, and I'm on 20 points, right? So where I would normally have made, say, 2,000, okay, at this point, let's say we would have made $2,000, right? Instead of that, I've now made 200. So what I've done with the martingale system is I've said I'm going to get in small increments, and as it gets better, I'm going to add more. But I'm risking more than I'm losing, because I've risked the $1,000, right? Let's say, and now I'm putting in only at smaller amounts. So my overall account should be risking $1,000, but at the moment I've risked $100 rather than $1,000. And then this account or this trade, instead of making me $2,000, makes me $200 or $300, okay, which is a complete waste of time. So the martingale system is a complete waste of time. But then if it goes into a loss, then I start doubling up. There is a point in losses where you can't double up anymore. There is a saying in the market that the market can remain liquid much longer than you can remain, the market can remain irrational much longer than you can remain liquid, okay? That's a fact. So even if you start small, it can build up into an absolute monster of a trade. It can actually become really, really bad and get completely out of hand. So be careful of martingale system. For those of you who don't know what the martingale system is, basically dollar cost averaging, doubling up on your losses and starting with smaller amounts and building it up as you go. There's no point in that. If you're confident in a trade, if you want to take a trade, take the trade, okay, because that's the trade, and then try and make as much money as you possibly can out of that trade. Don't go, I'm going to start small and build it up, because then you're just not confident in the trade, are you? If you're going to take the trade, be confident in the trade, jump into the trade, take the trade, put a stop loss in place, end of story. I've researched martingale at length and in the past, and it doesn't work. It fails, okay? It fails. It doesn't work. Because you've got a mishmash of profits. you don't know how much money you're making. You literally don't know how much money you're making or losing, because it's different. Every trade's different. That doesn't work. I haven't tried yet. Do you focus on any particular candle or series of candles? No, candles. Look, if you want to know more about candles, do yourself a favor. Just download a page of Google, and it just gives you all the different candle patterns and what they can do for you and all the rest of it. But I use candles for very, very basic information, and that is the size of the candle, the size of the wicks, where the body of the candle is, whether it's the top, bottom, middle, and that sort of thing. That's what I use my candles for, and to also give me direction, so I know it's red, green, it's going up, it's going down. Okay. I use my candles for very basic information. I don't go in depth into candle patterns as such, or the three crows or whatever the case. I do use that. I do use the evening star and stuff like that in my trading, but you don't need to. Okay, it's not that important. And remember, a candle is only valid, like a 4-hour candle is only valid for the next 4 hours. So what I generally look at is the overall picture of the chart. So the overall picture of the chart is within the support and resistance, and it's telling me where the price is going. So that's telling me exactly where the price is going. All the candles are telling me is the power of the move, the strength of the move, if the sellers are getting back in, the buyers are getting back in. So it's very general information. I don't literally trade with the candle. I don't say, oh, the candle's done that, so I'm going to do that. No, I don't do that. That's not my thing. What I look at, or it does sway my decision. If I see an undecided candle, I'm like, ooh, so the traders are undecided, are they? That sort of thing. It will tell me that sort of information, but it doesn't mean that I'm going to trade according to that candle or because of that candle. Okay, so yeah, no, that I don't focus on the candle as such. When you trade, be it from support or resistance, do you take into account market structure on the daily or weekly? Yes, always take into account the structure on the daily or weekly. So as I've said to you guys before, I actually take my levels from the daily. I take my resistance and support levels from the daily. I look at the structure on the daily. When I'm doing my research for the week, I will look at the general structure for the week. I don't go to the month these days. I used to. And then I'll take my trades on the H4 based on that. So yes, daily and weekly structure, super important. Daily structure being the most important. And that's because most of your institutional money, most of your big money comes from the daily trading, comes from the daily levels. The daily levels are the most important levels, because your institutions, when they're looking at price, when they're putting things in place, they put it in place based on daily levels, not based on anything else generally. Okay, there are some that are trading it on a weekly, but mostly daily. Martingale will kill you. I hope Martingale's not in my room, because that's a bit of a worry. It's not behind me, is he? Martingale and leverage aren't friends. No, they aren't friends, and the reason is exactly what I just said to you now. Is the market can remain irrational far longer than you can remain liquid, particularly when you're leveraged. You see, when it comes to investment accounts, one-to-one spot trading, that's not even trading. You can invest, you can leave it, you can set and forget it. It really doesn't matter, because the only amount of money that you can lose is the money you've put into the market, and that's it. There's no margin call, there's no worry, there's no hassle. The chances of all of your shares going to zero is pretty remote. It shouldn't happen. So generally you're okay if you're trading on spot. The problem comes in with leverage, and leverage is a completely different animal. And when you start trying to do the martingale thing on leverage, when you start trying to dollar cost average because you think you're going to get it back, it just gets worse. I always refer to the poor trader who's got a $100,000 pension. He's got this $100,000. I want to take this, I'm going to put it in the market. So you go and you put the $100,000 in the market and say, right, there's my $100,000, I'm in. Start losing $10,000, and the initial plan was, if I lose $10,000, I'm out. I'll keep my $90,000. But no, we get $10,000 down, we double up. We double up on the trade, and the next thing you know, he's lost another $20,000 and $30,000 down. Now, don't worry, we'll double up on the trade. The next thing you know, he's lost $60,000. He's only got $40,000 left of the $100,000, and now suddenly you've got a decision to make. Do I stay in the market or do I run? Do I stay in the market or do I run? And that's what happens with martingale. But okay, martingale is a different ballgame. It's where you start small and you build your way up, and it generally snowballs into a similar effect. So stay away from that if you can. Okay, martingale, do you also do delivery trades, the non-margin trades in the stock market? No, I don't. Thanks, Rob, for the breakdown. Oz 2000 does not look bad for a trade once S&P 500 picks up again. Okay. I just want to see the ASX 200 quickly, because I was in there the other day. Ooh. We actually made money off a couple of shorts here. We did okay. And I got out, and then look at that. Luckily, I did get out because that actually ran quite hard. This is running hard, eh? Sure. And it looks like it's going to turn around, come back and retest as well. But this is a lamp pole formation. This is running really hard. That's going quite well. Thank you for answering questions, Rob. Really much appreciated. Absolute pleasure. I'm glad that you all got your replies and answers as expected. So it's Thursday. It's a lovely Thursday today. We're heading into the weekend. I don't know how many of you guys are going to be taking trades on indexes before the weekend. I'm not touching the indexes before this weekend, for the simple reason that there's an interesting looking president in the USA that tends to say the wrong thing. He tends to say all the wrong things, and then when you wake up on Monday morning, you're in shock. You're like, oh, what happened? What happened now? What went down? You know, it's kind of crazy. And then there's someone phoning you with a margin call. Ha ha ha! You lost 500,000. You know, you don't want that situation happening to you. So no, going into the weekend, you don't really want to be taking trades if you can help it. On indexes anyway, that is. And perhaps on Forex as well. You've got to be careful on the Forex as well. But yeah, do take it easy. Thank you so much. Bye. See ya. Keep well. See you next time. See you on Tuesday for the next live show. For those of you who are leaving, I'm still here. Don't worry, I haven't left. I probably will soon. But yeah, the weekend's coming. The weekend's coming. So tomorrow's Friday. You know what I like to do with Fridays? I like to relax a little bit on Fridays. I'll put a video out for you guys and stuff like that. But as far as taking trades go, I've got this psychological thing where I would actually rather wait for Monday morning to take the trades and see what's on the go and see what's happening and see how the world has gone over the weekend. Because far too many times, and I've seen it before with other friends that have had margin calls, but far too many times, you know, you go into the weekend with all positivity and everything looking good. Your trades look brilliant. Everything's great. And then they say something silly over the weekend and you can't get to it. You can't touch it. You know, you can't do anything about it. You can't do anything. And you know, when you wake up on Monday morning, it's going to open somewhere down here and you were long up here, for example. And that's like really painful, because when it opens down here and you were long up here, that's a really big loss. That's massive. So when you go into the weekend, take it easy. Don't do something crazy. Don't take too many trades and don't jump the gun with it, because it's going to be quite a shock to you to wake up on Monday morning and go, what happened? What happened to all my money? So yeah, always careful on the weekends, even on the Forex, even on the commodities. Don't just jump in. Don't just go, oh, I'm just going to trade this and see what happens. But the ASX 200, that's quite a nice run. It's been long, been going long. But there's a lot of trades that you might want to take. Okay, there's a lot of trades that you might want to take. Yeah, gold. I'm going to stay in the gold over the weekend. I'm going to hold this trade. So I'm not going to get rid of it. But I would be careful on trades like S&P 500, NASDAQ, and things like that. The NASDAQ has pulled back quite a lot. Where are you, Mr. NASDAQ? The NASDAQ has pulled back quite a lot here, as you can see. And even if it does bounce off of this support level here, do you really want to take this trade over the weekend and hold on to it? Could be a bit complicated. Could be a bit of a worry. Will the Strait of Hormuz remain open? Will it be closed? Will there be problems in Iran? Won't there? Will there be situations that we have to deal with? So, like I say, be very cautious going in over the weekend. Okay, thoughts on VWAP or exponential moving average? Your charts just support resistance. Look, my thoughts on VWAP. VWAP works well on lower time frames. I've used it before. I've tried it out before, but it doesn't work well on the higher time frames. It works well. And by the way, for those of you who don't know what VWAP stands for, volume weighted average price. Okay, so yeah, I know abbreviations drive me insane as well. but it works well on lower time frames, and you can use it on lower time frames. It works a bit like a magnet, but on the higher time frames, it doesn't really do the job that you want it to do. So I stick with the support and resistance. I keep it simple. I keep it basic. Look, you can use any system you want. My whole philosophy in trading is not about the system. My whole philosophy in trading is about the strategy. Make more on your wins, lose less on your losses. So I don't mind what system anybody uses. So you guys can use any system that you want. If you're using Ichimoku, that's fine by me. Fibonacci, I don't mind. I've used all those systems before. What I've discovered over time is that all the systems are the same. Charts can't make you money. Win rates can't make you money. Every trade you take has got a 50-50 chance. What your system is doing for you, it's giving you the ability to manage your trade and the probability to make money. That's all it's doing for you. But a win rate's not going to make you money, and one system's not better than the other. So all I say is, you know, don't worry about it. If VWAP works for you, then it works for you. Use it. Don't stop using it. Keep on using it. It's the one that works for you. If, for example, the average true range works for you, keep on using it. You know, EMA, if you're using SMAs, EMAs, crossovers, keep on using it because it's working for you. Don't change that. Don't walk away from that. If it's working for you, you see, you keep on looking for that new shiny tool, thinking that the charts are going to make you money. But that's not what you're looking for. Just keep on using your system, but apply the strategy of making more on your wins, losing less on your losses. Once you apply the strategy and the business plan, the system becomes irrelevant. Once you understand that you're going to lose half your trades no matter what system you're using, then it becomes much easier for your mind to get around what's going on in the markets. So you don't have to overcomplicate it for yourself. Well, the one thing you don't want to do though is add a million things on a chart or indicators onto your chart. That's the last thing you want to do. I find a lot of traders doing that. They find one system, add another system, add another system, add another system. Eventually what ends up happening is you end up confusing yourself. You become frozen because you can't take the trade because one system's telling you to take the trade, the next system's telling you not to take the trade. And that's just basically how systems work. Another thing I always advise to be careful of is these automated things that draw in your resistance and support and lines and things like that. Stay away from that. They always draw them in the wrong place, and then you just end up drawing your own in anyway, and then you just end up with a page full of lines that just doesn't make any sense to anyone except maybe the robot that drew them in the first place. You're not trading against algorithms, you're not trading against robots, you're not trading with them, you're trading with human beings that want to make a profit, human beings that want to buy and sell. They want to trade with you, okay? That's why it's called trading. You're trading with those people. So you're bartering effectively without even having to barter, without even having to stand in front of them and shake their hands. You're just basically bartering with those people by buying and selling on the open market. Okay, big up everyone. I hope everybody has liked the video, by the way. Analysis paralysis. Thank you. Analysis paralysis. That's the word I'm looking for. Analysis paralysis. Guys, this has been a long live show. I think I'm going to be on my way now and start heading on my merry way onto the road and whatnot and enjoying the rest of my afternoon. And I've enjoyed being with you guys. It's been fun. I love being with you guys. I love having someone to chat to and whatnot. And makes my day. I hope it makes your day too. I hope you guys enjoy being on the show. Do come back and watch my other videos as well, which I put out on a regular basis for you guys, which are hopefully useful to you, which hopefully help you guys in your trading, because that's what they're all about at the end of the day. They're not there just for show. Well, they are. They're entertainment, but they're also there to give you guys a little bit of a lift and a little bit of help here and there. But thank you for being here today, guys. Thank you for watching. Somebody says here, after the market closes on Friday, Trump is all threats and then Monday corners again. Well, you never know. If it was that easy, then it would be easier to trade. But it's kind of random, because some weekends he's all nice, and then other weekends he's all random and aggro, and then it swaps around. So you never really know what he's going to be or what he's going to say or what he's going to do, which makes trading a little bit more difficult because you can't have access to the market over the weekend. But guys, it's been absolute fun. It's been fun being here with you. I'm glad you guys came here and watched the live show with me today. And I'll see you guys back here again for another live show on Tuesday. For the A team and the members, I'll see you back here tomorrow morning for another members video. And then, of course, there will be another video out tomorrow afternoon. Make sure you guys come back and watch that as well. You might enjoy it. It might be of some help to you somewhere down the line. Have a good weekend. Till the next one. Thanks, guys. Cheers, ciao, and bye.